So this convergence upward towards what we are hearing as a firmer cash trade.
Hi once again, everybody. Welcome back to the CommStock Channel. I'm Marlin Bohling with you. I am joined by Joe Camp of CommStock Investments. We're going to take a look at the end of the trading week. Here it's Thursday. Yep, there's no trade tomorrow because it's an observance of Good Friday, and so the markets will be shut down. Now we start a 3-day holiday weekend here. And Joe, as we finished up the trade here on a Thursday in the grain sector, it just looks like they didn't really get anywhere. Not much traction in either direction. How come?
In part, that's an accomplishment to hold up and be resilient. After what had been a good upside run for corn futures, they led the way. It was 7 sessions straight. We were higher before seeing the nearby contracts take a bit of a breather. That comes into play on the recent upside. It has been observed there being heavier farmer selling out there. I think some farmers letting a bit of the old crop more go ahead of what they know is going to be this busy stretch of the planting season now unfolding. Some of that, of course, already going on in places, really breaking out over this next 7 or 10 days, albeit at times disrupted by a wetter forecast. So factoring in a lot of different pieces of input while also still playing the waiting game, and that being what regards to tariffs and the latest developments on particularly China, and not just tariffs, but also these new shipping fees, the port fees levied on Chinese vessels, Chinese made and Chinese operated. So that would cover, of course, a whole host of U.S. goods, including agriculture, questions, some hopeful opinions about agricultural carve-outs possibly being announced, but otherwise waiting for that. More clarification on these shipping charges that were set to be discussed today, and then we're set then to guide us into this long weekend. It feels like that's going to be top of focus, what the responses are and what the developments are generally related to China again over this long weekend.
Well, of course, over the past week, we've seen a lot of flooding take place in the Ozarks, up toward, let's just call it in general, the southern Corn Belt along the Ohio River Basin, the Tennessee Basin, and that sort of thing. But now it looks like maybe that pattern is starting to shift to the north and west a little bit. Really heavy rains forecast for this weekend, maybe in eastern Oklahoma and eastern Kansas and into Missouri and Iowa for a change. And they have been kind of struggling to get moisture in some of those areas, especially further north. Now, maybe they're going to be looking at planning delays instead. So that's a bit of a switch here.
It's something being noticed by markets, no doubt. When you look earlier in the week at some weakness for wheat, for example, that can be associated with the wetter forecast across the southern plains. And so where they're not just getting inundated, and also to think about these disruptions that you allude to for row crop plantings, well, it's possibly very beneficial in places this moisture is, of course, as spring breaks out. And it's needed moisture across the southern plains. It's not needed. We need a break, of course, in these areas, even as far up into the Midwest as southern Illinois, down southern Indiana, of course, along the Ohio River, opposite of the Mid-South region, which has been well reported on in terms of those heavy rains and flooding issues, logistical problems on the Ohio River that we've got to watch out for. But ultimately, that weighing out, as we oftentimes do in the spring, of what can be really good rains and healthy as we get the planting season rolling forward, and those being a disruption and something that slows down what has to be a real effort to get in those higher corn acres we continue to think about.
Well, of course, it was a short, abbreviated trading week in the grains. It was kind of a choppy week. Did any one of the grain markets emerge as maybe a possible winner over the week-to-week changes, or was it just nothing to write home about on any of them?
I'll talk about soybeans and the soy complex as a whole as the standout because of how it has held up relatively very well to all of the ongoing drama surrounding China and these changing trade policies, the trade war heating up, it seems. And soybeans are the most vulnerable when you think about crop exports relative to China. China, in the current marketing year, accounting for just more than 50% of all of our soybean sales, and that being a total that is more than double what our current carryout estimate is for soybeans. Looking ahead towards next year, that can be a real problem if we don't have those Chinese buyers returning later this summer. For now, though, we're buoyed on one, optimism over the potential movement on a new trade agreement, maybe sometime over the summer with China, and or two, better demand from other sources still showing up. One, other countries on exports, but two, domestic demand. And relatedly, this move higher almost at the highs of the year for soybean oil futures. You've got optimism on biofuel policy clarification coming from the government, good use anyway currently. And then on soybean oil exports, a record pace and really not leaving as much left to compete with that hot biofuel sector here at home. So a lot of moving parts for the soybeans. I think they stand out as a winner, even as they edged a bit lower at the close this week.
Seems like the talk about rain in the plains and the southern plains seems like it really took a bite out of that wheat market, even though maybe the parts of the high plains further out west, where they really, really do need that moisture, may pretty much miss out on this. So what's your thought on that about the wheat market potential here as we get into next week?
One is that the market had been pricing in the bullish scenarios related to winter kill leading into the dry development period, these wheat crops waking up and heading into development and making yield prospects that would have otherwise very much been threatened by continued dryness and still will be, yet you had some recent rains. You had a late snow that put at least some moisture down into areas of Kansas and the Texas Panhandle. And so rains in the forecast now are associated by traders to what we've learned, for example, in the crop progress reports. It's just the second nationwide crop progress report of the year that we received this week, and condition ratings, while down a touch from the week prior, the first reading at 47% good or excellent for the nationwide winter wheat crop, you still see these pockets of stress and problems in those states: Texas, Oklahoma, Kansas, Nebraska, even on up into South Dakota, notably with some pretty high poor or very poor ratings for their winter wheat crop. This is something that spells trouble potentially, but yet is now possibly mitigated by the forecast ahead.
Well, we did see gains in much of the livestock complex here on Thursday. How encouraged are you by the way that those livestock futures have acted now over the past week?
Encouraged that we can get back to the sort of core fundamentals of it and talk about this concept of convergence. And that's the case as the April live cattle futures are in delivery. We've got a discounted next up June live cattle contract. A similar story for feeder cattle futures, where you have April expiring for cash settlement today, and yet having a premium over the next up May. So this convergence upward towards what we are hearing as a firmer cash trade this week, and that can be lately the case after the market overreacted, seemingly, if you will, to the downside volatility that spilled over, like from the stock market and those big volatile down days. We had at one point a limit down day for live cattle and feeder cattle futures. We've sort of shaken loose of that type of nervous volatility. Not that it can't return, but we're thinking more about having these board values catch up to the better holding cash.
Any technical aspects of this livestock trade that you're keeping a close eye on?
We're right back above the sort of key middle of the range moving averages. We did have that sharp downside correction amid all of the outside volatility. And now on this last several days of upside stretch for some of the live cattle contracts, that's 5 in a row, where you're looking at a capturing of support points, and today, pretty key on different contracts, a closure of these gaps that were opened on the 4th of this month, a couple of weeks ago. And now above the market, you don't see much until you'd return to these last sets of highs. And in some instances, those were feared to be double top type formations. We would not want to see a triple top, but it's also a test that if we can clear it, opens up again a market to uncharted territory. These are all-time, of course, high prices we're talking about here.
All right, on the hog market activity, does it really pay much attention to what's going on in China these days? It used to be that was a big driver for the hog market.
It's still an important headline type of input as all markets react sensitively to the ongoings with China. But I think, as you point out there, it is less so than it would have been rewind a couple of years ago. We've brought down our reliance on pork exports to China. We know how important tariffs are to the pork sector because of the high proportion pork, about 25% projected to be of total production here in 2025. But the Chinese portion of that has been brought down recently to under 10%. I think this last year running at around 6 or 7% of all U.S. pork exports. So pork exports important, but less relied upon for China. And that's something we're thinking about, yes, for all markets here, whether it's corn and the lesser reliance there and the bigger dependency of soybeans. Everything goes back to what we started with, which is these tariff developments now that are going to dominate over the weekend on whether or not we go forward with these shipping charges, and if the more than 100% tariffs on both sides, U.S. and China, are here to stay, or if we have anything moving to suggest that negotiations can come into play here over the summer. Because like for corn, for example, and this relates to what we're talking about with U.S. pork, while exports are more minimal here most recently, again, you can rewind back, of course, to 3 or 4 years ago and see what we could possibly stand to regain if the alternative is eventually we come to another agreement and some of this war eases over with China. We'll see.
Is all this tariff talk, is it making you change your marketing strategy for this year or not?
In part, it's to encourage our customers to recognize the potential for heightened volatility to continue in relation to all of this tariff stuff, the uncertainty of all of the political influences that have become more heightened now have us hedging for larger price swings, okay, and having that as part of the marketing scenario that we can have bigger moves both to the downside and possibly to the upside. And so that can come into play when we think about our marketing alternatives and what kinds of contracts we use related to the flexibility of getting in and out of them according to what we see over the now course of the next summer, the next marketing year, the next 4-year term, the foreseeable future for sure.
Joel, it's been great to talk with you, and thanks for outlining what happened this week and kind of set the stage for as we come back after the 3-day holiday break. So best wishes to you and yours for a great Easter weekend. Stay safe out there, and we'll check in with you next week. All right. Joe Camp with us. He is with CommStock Investments. And that'll do it for this episode. And thanks again for joining us. For producer Brianne Jenkins, I'm Marlin Bohling. We'll catch you next time here on the CommStock Channel. Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.